All right, let's dive right in. Today, we're unpacking a really thought-provoking piece of research from Bank of America. It's called The Flow Show, and it basically lays out a case for a massive shift in the financial world, all driven by these two huge ideas: disruption and debasement.
The report kicks off with this quote, and man, does it capture the mood right now. It perfectly sums up the big anxiety facing every investor. You know, it's not just about picking the right stocks anymore. It's about trying to make sure your gains actually outrun the slow melt of your money's value.
So this word, debasement, what is it really? It's the central idea here. The easiest way to think about it is like adding water to a drink. You still have a full glass, maybe an even fuller one, but the drink itself is weaker, it's diluted. That's kind of what happens when a government intentionally weakens its own currency.
And that brings us to the first big point, the investor's big worry. Why is everyone, from Wall Street pros to regular folks, suddenly so focused on this idea of debasement?
Okay, so here's the core thesis of the whole report. It makes a really bold claim that we're heading into a new era of policy disruption that is specifically designed to lead to the debasement of the US dollar. Let's unpack what that means.
So, what's the first clue that this is happening? Well, the report calls it champagne for stocks. It seems a little weird, right? But a weaker currency can actually be like rocket fuel for asset prices.
The evidence is pretty stark. First off, the S&P 500's price-to-book ratio, which is basically how much you're paying for a company's actual stuff, is sitting at a record 5.3 times.
And it's not just that one metric. If you look at the price-to-earnings ratio, stocks are in the 98th percentile of their historical valuation. Let that sink in. They've only been this expensive 2% of the time in the last 125 years. That's pretty frothy.
And it's not just talk. People are putting their money where their mouth is. Bank of America's own clients, we're talking $4 trillion in assets here, are holding 64% of their money in stocks. That is way up at the top end of the historical range. People are all in.
So what's going on? Why are things so hot? The analysis points to a few things. Of course, there's the AI boom. That's the obvious one. But there's also this anything but bonds mindset, a big generational shift where younger folks see stocks, not houses, as the way to build wealth, and this broader global rebalancing of economic power.
Okay, so if stocks are flying high, what's really fueling the fire? The report argues the real force here is the beginning of what it calls the dollar's deliberate decline.
And the BOFA analysis suggests this is no accident. There are three huge pressures pushing the dollar down. First, you've got central banks all over the world cutting interest rates, which puts pressure on the Fed to do the same. Second, the U.S. government just plain needs lower rates to be able to pay the massive interest on its debt. And third, from a political view, creating a market boom can look like the easiest way out of a fiscal jam.
And this isn't some fringe theory. The pros are actually expecting it. A survey of fund managers shows that more than half of them think the Fed will have to go back to some unconventional tricks, like quantitative easing, firing up the money printer, just to manage the country's debt.
All right, so if the main idea is that the dollar is going to get weaker, the next logical question is, what are people doing about it? And that brings us to the idea of hedging against the future.
Let's just ask the question straight up. If you're an investor and you're worried that the dollars in your account will buy less stuff tomorrow, where do you move that money to protect its value?
And the data. Well, the data tells a really interesting story. In just 1 week, sure, tons of money went into cash and stocks. But look at the other numbers. Billions flowed into crypto and gold. Those are the classic hedges you buy when you're worried about currency weakness. That's a pretty powerful signal.
But here is the real kicker. Even with billions flowing in, overall, investors are barely exposed. That same fund manager survey shows that while almost half have a little bit of gold, only 9% have any exposure to crypto. It kind of suggests that if this whole debasement idea really takes off, we could still be in the very first inning of a massive shift.
Now, these huge financial trends don't just happen on a chart. They have real-world consequences. And the report connects all of this to a really surprising place where these forces could play out: the race for the Arctic.
The report lays out this fascinating, if contrarian scenario it calls Baked Alaska. Just imagine, a peace accord leads to the US and Russia actually cooperating to develop the Arctic's resources, control new shipping routes, and ultimately drive down energy prices for everyone. It's just a reminder of how fast the global chessboard can change.
And the reason this matters is because the stakes are absolutely enormous. We are talking about a region that holds a huge slice of the world's undiscovered energy. This isn't just a side plot. This could be a central driver of the global economy for decades to come.
So let's pull it all together. The big picture that the Flow Show is painting is one of really profound change.
From the champagne-popping stock market to strategic moves in the Arctic, the report argues that the hidden engine behind it all is a move toward a weaker dollar. And it shows that smart money is already trying to find cover.
Which leaves us with one final and really critical question. A question that affects every single one of us. In a world of deliberate debasement, where the old rules about safe assets are being questioned, what does it actually mean to preserve your wealth for the long haul?